As construction climbs to a $1.34 trillion contribution to GDP, stress fractures are starting to emerge, and they could reshape your credit risk strategy. Welcome to the Commercial Pulse update for September 16th, 2025. The Experian Commercial Pulse report is a bi-weekly report offering a snapshot of the US economy and how it's impacting small businesses nationwide. Let's begin with the latest key macroeconomic stats. Inflation accelerated to 2.9% in August, reaching the highest level since January, partially driven by tariffs. While consumer prices increased, producer prices eased to 2.6%. Now, if the cost of produced goods saw declines, that decrease should eventually pass on to consumers in the future. Unemployment rose to 4.3%, the highest rate since October of 2021. Small business optimism climbed to 100.8, reflecting cautious confidence among business owners. Meanwhile, consumer sentiment fell to 58.2, continuing its downward trend in the face of economic uncertainty. Beneath the surface, job creation slowed, with just 22,000 new jobs added in August, a sharp drop from the 79,000 reported in July. However, wages held steady, with average hourly earnings reaching $31.46, highlighting continued tightness in the labor market. With consumer sentiment coming in at 58.2 in August, down from 61.7 in July, small business optimism rose modestly from 100.3 to 100.8, the highest reading since January of 2025, suggesting a more resilient outlook from small business owners. And the July reading of the Experian Small Business Index stands at 32.8, down almost 12 points from June and down almost 17 points year over year. And this 11.9-point drop signals a weakening business environment. The key driver? Tighter lending standards. Approval rates have dropped and consumer delinquencies are bleeding into small business owner credit files. As financial pressure builds, business fundamentals remain mostly stable, but stress is emerging beneath the surface. This month, Experian took a deep dive into one of the US economy's foundational sectors, construction. Since 2018, construction GDP has grown 53%, reaching $1.34 trillion in Q1 of 2025. The sector now contributes 4.48% of total GDP, and that's just shy of its 2020 peak. Employment in construction has surged past 8.3 million, up 9% from pre-pandemic levels. But behind the growth, cracks are starting to show. Building permits are down as rising interest rates and oversupply cools demand. Vacancy rates are up, and housing inventory has returned to pre-pandemic levels. Construction material prices, especially for insulation and drywall, remain elevated, adding to operating costs. The credit story behind construction is one that reflects this stress. Here we can see a flattening out of the number of commercial accounts in use by construction companies. Construction firms are seeking more credit, but fewer trades are being opened, suggesting lenders are becoming more cautious. Here we can see the average number of commercial credit inquiries per business, and we can see that need for commercial credit building from September of 2021. 90-plus day delinquencies in the sector rose to 0.07%, their highest level in years. And here we can see generally a flat growth in risk scores for construction firms following the pandemic until now. In short, construction is still growing, but at greater financial risk. For chief risk officers and commercial risk lenders, the data points to a tightening credit environment. Underwriting teams should consider recalibrating score thresholds and watch for increases in commercial credit inquiries as potential early warning indicators. Construction and real estate sectors in particular merit close attention as economic cooling creates ripple effects across lending portfolios. You can stay ahead of these risks by integrating real-time data trends into your portfolio monitoring and risk segmentation strategies. And there's a lot more to our deep dive on the construction industry in this week's report, so please make sure you are subscribed. If you found this update helpful, we encourage you to explore more by visiting our Commercial Insights Hub. Also, subscribe to our YouTube channel And if this video has piqued your curiosity, reach out to your Experian account team to start a conversation about the possibilities we can unlock for your business. Last, remember to keep informed so you can stay ahead. And we'll catch you on the next one.